Traders, imagine how easy it would be to trade if you knew where the price would move on the next candlestick. I mean, everyone wants to know that, right? But what if I told you that our team at Magic Indicator Strategies had found such a tool? This indicator literally predicts the price of the market in the near future by analyzing the candlestick's high and low. It also backtests all its predictions and learns from its previous performance. Are you excited? We're sure you are. So stick around for the next 8 minutes. Because by the end of this video, you'll have an effective trading strategy in your arsenal that will grow your trading portfolio fast. Okay, enough talk. Let's get straight into it. So, how can we add this indicator to our chart? First, open the Indicators tab and search for Breakout Probability. This tool was created by Zierman. Once you've applied it, the chart will look like this. The indicator plots red and green lines and assigns a percentage to each line. The higher the percentage, the higher the probability of the line being reached by the next candlestick. The algorithm calculates all the green and red candles separately, depending on whether the previous candle was red or green, and assigns scores if one or more lines were reached. The algorithm then calculates how many candles reach those levels in history and displays it as a percentage value on each line. This magic indicator helps traders to understand the likelihood of the next candle's direction, which can be used to set your trading bias. These levels can also be used for setting stop losses and take profit targets. For example, the indicator predicts a high chance of the next candlestick being bullish. We open a long position and set the stop loss slightly below the closest red plot. We see that the chance of stop loss being triggered is low, which gives us plenty of confidence. In the next example, we will take a short position as the indicator predicts a move to the downside. The stop loss is set accordingly to the line. Okay, now you know how this indicator functions. Let's build a full trading strategy around it. The strategy's goal is to follow a trend and find optimal entry points based on price breakouts. So for the second indicator, we will add the MACD plus SMA 200 strategy created by ChartArt. For the third tool, apply Support Resistance Dynamic V2 by Lonesome the Blue. Once you've added the indicators to the chart, head over to the settings of the MACD plus SMA strategy and make some adjustments. After that, open the settings of the support and resistance indicator and also make some minor changes as we're doing right now. Alright, the strategy is ready. Let's proceed to the entry rules for a buy trade. So to confirm a long entry, the market must first be in an uptrend. This is confirmed by the price's relationship to 200 SMA. When price closes above the moving average, it signals that the bulls have taken control of the market. Only long positions can be opened at this time. The SMA color also matters. In order to confirm an uptrend, it must be green. Once we have this in place, check the bar colors. When buyers show high interest in purchasing the stock, the bars turn green. This is a very strong confirmation of bullish momentum. You definitely don't want to buy the stock when the bars are blue, as this signals market consolidation. So keep that in mind as well. Now, where do we actually enter a long trade? How do we find an optimal entry? Well, here's how you do it. Simply wait for the price to break above the resistance level for the first time. The resistance will then become support. At the same time the breakout happens, there must be a high probability that the price will continue to rise. For that, check the Breakout Probability Indicator. The chance of the next bullish candlestick should be greater than 50%. Enter a long trade once you have these rules in place. Set the stop loss either at the closest red line or at the recent swing. Target 2 times the risk with this strategy. We hope you understand the rules. If not, don't worry. We'll look at more examples. So here we see that the market is in a clear uptrend. The price moves to the upside and breaks previous resistance. We have a confirmed bullish breakout with a high chance of success. So we follow the rules and execute the trade. Traders, if you're enjoying the content, be sure to like this video and subscribe to our channel. For sell trades, the opposite is true. First, make sure you sell when the market is in a downtrend. A downtrend is confirmed by the price falling below the red 200 SMA. Strong bearish momentum occurs when candlesticks turn red. So when do we sell? If you've been paying close attention to the rules for a long trade, you already know the answer. We sell as soon as the price breaks below the support level for the first time. The breakout probability indicator must also indicate a high probability of the next candlestick being bearish. With that being said, a sell trade is opened at the close of the trigger candlestick. Set the stop loss, either at the closest green plot or at the recent swing. Target 2 times the risk. Traders, now you know how to find the perfect trade entries with this strategy. We found it very accurate in 5, 15, and 30-minute time frames. Give it a try on a demo account, and remember to backtest it on any market you're willing to trade. We can't stress how effective risk management is for long-term success in trading. Backtesting provides invaluable insights into the risk associated with a trading strategy. By assessing historical performance, you can determine the strategy's maximum drawdown, winning and losing streaks, and other risk-related metrics. This information is essential for you to establish appropriate risk management measures, such as stop-loss orders and position sizing, ultimately improving the strategy's overall performance. We recommend the TraderEdge app for backtesting. This app will save you a ton of time and money. It is very easy to use. All you need to do for backtesting is to set the initial account size, profit and loss per trade and fees. Then head over to TradingView, apply your favorite trading strategy to the chart, jump back in time, and press the replay button. When the strategy gives you a signal to trade, set the stop loss and take profit targets using the measurement tool. Add profit or loss to TraderEdge based on the outcome. Test the strategy for at least 50 times. TraderEdge will give you all the information you need about your strategy's performance. Based on these results, you will have an idea of what to expect from the strategy in terms of profit and loss and maximum drawdown. 95% of traders skip this part, which results in blown-up accounts. You don't want to be one of them. By the way, besides the quick backtester, TraderEdge also gives plenty of other super useful tools for traders to improve their skills. You can find a collection of the best indicators and strategies that have been proven to work. Some indicators have a really high win ratio. Traders, if you sign up right now, you will also get a free step-by-step backtesting course that has $100 value. In addition, TraderEdge will provide you with a free course about how to build a successful trading strategy. This is definitely a great deal. So sign up for TraderEdge today, and you will be amazed at how quickly you'll become a pro trader. We will leave a link to it in the description below.